I just had a meeting with a little known, sort of a secretive hedge fund, but they're the best traders that I know. And they told me that they have one specific bet on right now that is actually well above average for their usual trading size. What I actually agree with this position.
So this hedge fund's largest position is in banking stocks. Names like Bank of America, Wells Fargo, JP Morgan, and even some of the indices, or just broadly speaking, sort of ETFs that represent some of these banking stocks, even European banking stocks as well. They like names like Barclays and so on and so forth. And the reason this is threefold. And by the way, before I even say that, I fully agree with this view, and I'm long banking stocks as well now through various options trades. But number one, their view is that interest rates are slowly rising, certainly in the United States, and potentially also in Europe going forward. Not dramatically, but a little bit, which should help out the banks at the margin with net interest rate margins increasing. Number two is really the relative underperformance and the pain that these banking institutions have been in for years and years since the financial crisis. In other words, these banks are still lagging, and I'll show you guys a chart in just 1 second. And third is technically in absolute terms. So let's have a look at this real quick here in the chart.
So here's the chart of the BKX. It's an index, or I guess it's an index representing the banking stocks. It's this line here, this colorful one. And then in blue, we have the S&P 500. And you can see that since the financial crisis, the S&P 500 has dramatically, again, that's a blue line, dramatically outperformed these banking stocks, although they have been catching up. And so the banking stocks, in other words, have been underperforming. Now, if you zoom in a little bit closer, you can see that the banking stocks have been catching up quite a bit, but most of that has just been since the US election results last November. But that move has been interesting from a technical perspective as well, okay? We broke past what had been 15-month consolidation phase, and then they blasted higher. So to them, this entire consolidation phase from the summer of 15 into October, November 2016 was really just a meaningful consolidation phase that still would continue to see these banking stocks go higher.
So that's what this hedge fund told me. This is a very smart bunch of people. They're not always right, but their core sort of takes usually tend to be pretty good. And they have I believe about a 6 to 12 month view on this. And of course, any strongly moves against this would certainly be something that they would respect as well. But I wanted to give you guys a little bit of light in some of the people that I speak to on a daily basis. This is the kind of stuff that I talk about and share with Clubhouse members every single day. So I hope this was helpful for you guys. If you want to follow along in the Clubhouse membership, where I talk about trades specifically every single day, so people really can look over my shoulders as I execute things, you can take a trial for just $7 for 30 days. Down below in the comments section, there should be a link for that. So I'll see you guys in the next video.